we have to invite our first big corporate on the show. The Tech Mahindra's management is with us. Tech Mahindra has actually had a good start to 2019, hitting a fresh lifetime high. The stock, that is. Manoj Bhatt, the CFO of Tech Mahindra, joins us now. Good morning, Manoj. Thank you very much indeed for joining us. Well, first up, the buzz is actually not around Tech Mahindra as much as around L&T making its bid for Mindtree and then a possible big consolidation of the L&T technology twins with Mindtree. What are your thoughts on this possible impending consolidation? Big competition?
Good morning, Lata. I think clearly, I mean, a lot of speculation in the newspapers, so I don't know what is going to come out and what is not going to come out. But clearly, I think there is an ongoing trend of consolidation across the industry, and we see this as, if it happens, as a continuation of the same. So, and from our perspective, clearly a lot of consolidation because of course, people looking for enhanced opportunities, and we welcome any such moves. But as I said, I don't know how much of this is speculation and how much is real.
But is it a little tough to do hostile takeovers in an IT company because people are so important? So is it a bit of a dangerous game?
So I think historically there have not been too many, because clearly I think this is a people business. I think the only assets we have are people. So so typically most combinations have been in a very process which is based on consensus and discussions and planning the way forward. So and if this one happens, we'll see how it plays out. But historically, that's one of the reasons where most of the combinations have been more friendly rather than hostile.
Okay. Mr. Bhatt, good morning. Thank you so much for joining us. Can you give us some color on what's happening with respect to deal wins in this quarter? The last 2 quarters were very good for you. You know, the company saw new orders of in excess of $400 million in Q3, more than $550 million in Q2. What is the run rate expected to look like as we go ahead?
So I think I don't have an exact number, but clearly from our perspective, I do expect that the deal win momentum will continue. I think we are seeing a lot of conversations and a lot of conversions. So I do expect even this quarter the deal win numbers should be pretty healthy. As I said, exact numbers we'll know at the end of the quarter, but looks like it'll be a healthy quarter from that perspective.
Healthy. Can you just tell us whether you're seeing larger amount of deal wins in the telecom space, or is it the non-telecom vertical that is seeing more traction lately?
I think it is probably, if I look at the last 2-3 quarters, clearly more traction in the telecom vertical compared to where it was in the past. And I've spoken about it with you guys, I think a month back also. And that's because I think the overall framework and the overall environment in telecom is changing. I think a lot of our customers are looking to invest in digital, looking to invest in new age areas, and looking to modernize themselves. So that's clearly playing out as a trend, and that's something we do expect to continue. So on the enterprise side, it's been more or less steady, and it's been a steady journey for us of growth as well as deal wins.
Okay, I wanted to, you know, what will be your headache now? The rupee's appreciation, now at 68.90. Can you give us some idea of what kind of an impact it has? And traditionally, within how many quarters does it adjust in the price?
So 2 or 3 things. So first is, I think from an immediate impact, any appreciation of the rupee translates into roughly about 20 basis points for us. So every percentage points translates to 20 basis points of hit on the EBITDA. Second is, of course, we will have to revalue all our AR at a lower number compared to last quarter. So there will be a element of forex losses which will come in the other income line. I think, but if you look at us, and every company is following a different strategy, our strategy has been to go up to 2 years out in terms of hedging the rupee. So we are almost about 75% of our exposure is hedged across multiple quarters because of the volatility, and we follow a kind of almost a rule-based approach to that. And so in that sense, part of these losses will be mitigated by gains on our hedge portfolio, which we have been continuously covering, and that's something we have not changed in a long time. And to your last point, I think in terms of recovery, I think that's a more, a macro picture in terms of, as we see it, with potentially increased attrition and wages tightening, as well as some of the issues around immigration, visa, less availability of talent. I think all of that is pointing that potentially over the next few quarters, I think it's an industry thing. We'll have to see how it pans out, but I do believe that that's going to be a key initiative for most of us to figure out how do we get a higher value for the same kind of services, considering that the labor environment is becoming tighter.
You used the term ARs. What is that? Advanced revenues?
Accounts receivable, I'm sorry.
Okay, accounts receivable. Sorry.
No, accounts receivable.
Sure.
Okay. So just a follow-up to the, to your comment on margins. I mean, as of Q3, your EBIT margins are sitting at about 16%. You did speak about some issues like, visa constraints, perhaps larger transition costs as well. And in the past, you've said that the pace of margin accretion will be a lot slower going ahead. Can you just tell us what kind of margin band would the company be working with over the next few quarters?
So I think so the context of those statements was that clearly I think we have gone through a journey of almost 7 quarters of margin improvement, and from our perspective we are reaching kind of the end of that journey based on the first wave of initiatives we took. So what we feel is that if I look at a full year basis margins for FY19, our goal would be to maintain that margin and then potentially increase it a bit. But clearly, as I said, there are pulls and pressures on this. So the pressures are, of course, on the wage side, as well as potentially some changes in the environment which could happen in the future. But overall, I think at this point, our goal would be to maintain margins at a minimum, and then we'll see how it goes from there.
Okay. Well, more generally, Manoj, how's business? I mean, on the one hand, we had last time, even people like TCS saying that they were not prepared for the flow of orders. They were expecting to build a bench, and they actually had to outsource some of the work they got. And then on the other hand, you have NASSCOM saying that they're not even sure enough to give you a number for the FY20 growth. Well, just, okay, those were pictures of Mr. Parikar's body being taken to the BJP headquarters. We'll come back to that after we speak with Manoj. So Manoj, where really is the truth? Is there a global slowdown that the US is referring to, and hence no rate hikes and the NASSCOM worries? Or is the truth with a bunch of orders that are flowing for you all?
So I think great question, Lata. So from our perspective, if I see client conversations, I don't see any reflection of any slowdown, which we have been referred to, right? Okay. So most of the clients are really talking about their own plans and their own investment plans, and potentially even how they want to optimize in certain areas. So that whole gamut of discussions is pretty much still not reflecting any of the news around potential recession, slowdown, and so on and so forth. The second part of the story is that clearly, if we look at every industry today, it's going through a fundamental change, and potentially those investments, I believe, are totally necessary for most of our customers to do. So if I look at those two, I feel positive that while there might be some residual risk of slowdown coming because if there is a wild economic swing, but the conversations do not seem to indicate any such thing with any of our customers.
Okay, all right. Well, Mr. Bhatt, we'll leave it at that. Thank you so much for joining us and giving us an update on the business, on the company, and on competition as well. Let's take a quick break on that note. Up next, Tarun Sani, the Vice Chairman and MD of Triveni Engineering, will join in to talk about the fresh ethanol tender floated by oil marketing companies. Stay tuned.